Hello, and welcome to the Orthodontic Products Podcast. I'm your host, Allison Warner. Today, we're going to look at credit card processing fees, specifically why you, as small business owners, need to understand the ins and outs of your credit card statements. The fact is, these fees can not only affect your patient payment experience, but also your practice profitability. Joining me to talk about this is Eric Cohen, CEO and founder of Merchant Advocate, a company that helps businesses get the best credit card processing fees and rates. This podcast is actually part of a 4-part article series that Eric has written for us and will be available on our website and go more in depth on these issues. But to get an overview, we have Eric with us today. Eric, thanks for joining me.
Yeah, thank you for having us, Allison.
Great. So to get started, can you tell our audience about what Merchant Advocate does?
Sure. So Merchant Advocate helps businesses reduce the cost of accepting credit cards, but without leaving their current processor, which is very, very important, especially in this industry. Our whole goal is, can we help the practice eliminate any hidden fees, miscellaneous fees, things that should not be in their merchant statements, or increases, whatever they may be, that drives the cost up. And again, I think the most important thing is we do this all without a practice leaving their current processor.
Okay. So can you talk a little bit, for those who aren't familiar, how do credit card processing fees work within the orthodontic practice?
Yeah, so credit card processing fees, first of all, what everyone should know is the credit card processing world is unregulated. Okay, so there's 3 parts to it. There is the bank side, which is regulated. There is Visa, MasterCard, which has some rules, and American Express and Discover. I just generalized Visa, MasterCard. But then there's the processing side that has no regulation. And what happens is the processors will take the hard cost and they'll mark up the fees and send you a statement, or actually don't even send you the statement. The statements are online and they're cryptic, which means you don't know if the fees are going up. You don't know what's real. You don't know if there's pure profit. Is it a Visa fee? Is it not a Visa fee? Very, very hard to decipher. It's almost like 10 times worse than a cell phone bill. And I know most of us don't understand our cell phone bills.
Right.
And that's what's really important to understand is it's a foreign language. I always say that if you don't have a master's in merchant services, you're probably paying too much.
Okay. So then what are the types of fees or ways that practices are kind of being, losing money or paying more to do business? So I know there's inflated processing fees. Let's maybe start there.
Yeah. So what's first of all, it's the fee is called your discount rate, which is surely not a discount. So it's kind of misleading a little bit there.
Okay.
But there are hidden fees. So there are percentages, there are transactions, there are extra costs, especially with reoccurring billing. Orthodontic is big for reoccurring billing. There are penalties. So while we all know that when you don't have the card present, most of us understand that the fees are higher. But what most practices don't understand is there's also penalties if you're not set up correctly.
Ah.
Okay. And what we find in a single location or even multi locations is the credit card processors tend not to set up every account correctly. And it causes these penalty fees or these miscellaneous fees.
Okay.
The other thing that we know about the industry is most practices are integrated into some sort of software or practice management software.
Mm-hmm.
Now, the reason that's important is most of the time you only have one choice of who your credit card processor is when you're in a software like this. And that's where we come in. The credit card processors understand this. And one of the things, the way they make money is they will continue to raise the rates or they'll add a new line item, right? There are line items that appear to be real Visa, MasterCard fees because it kind of sounds like a fee.
Yeah.
And when you call customer service, unfortunately, the rep will say, yeah, that's a real fee, when we know that they're actually padded. So very, very easy for the processors to do this because no one really understands these merchant statements and they kind of get away with it.
Okay. And then before we kind of get into how do they combat that, there's also an insurance angle here for how they could be seeing more fees or having more cost.
Yeah. So one of the things we've seen in the medical community, in medical and dental, is if you are taking insurance, we are seeing that insurance companies or third parties to insurance companies are now trying to remit payment for insurance via virtual credit card.
Okay.
And those virtual credit cards cost more than every other credit card that's out there. Now, you don't have to take them. You could push back on an insurance company, but there are ways to reduce those cards. So it's really the insurance people or practices that take some sort of insurance and those companies that use third parties to remit payments, right? So you have to be really careful. And what we find is practices will push back sometimes, but then all of a sudden they start creeping up again in insurance companies. And when you think about it, these companies and their third parties, I mean, just like a consumer wants their miles and their points,
Mm-hmm.
they get miles and points every time they send you a card and you use the card.
Ah, okay. Okay.
Yeah.
So then what's the best way for an orthodontic practice to kind of find ways to save money on these credit card processing fees or combat these inflated fees? Where should they start?
Yeah. Well, I mean, they should probably use a company like ours, in all honesty, but
Yeah.
without, using a sales approach there.
Yeah.
I'm half joking there, but they really have to have their accounts monitored on a monthly basis. They have
Okay.
to have someone in the practice that understands the fees, that understands the lingo, that looks for, penalties. Even a penalty that is easy to find is something called a non-PCI fee, right? If you don't answer what's called a PCI survey, which is impossible to answer because it's written in a foreign language,
Mm.
your fee could be as little as $10 a month. We've seen up to $500 a month in
Oh,
penalties, right?
okay.
And the reason people use a company like ours out there is we understand the language, we have technology that reads these statements.
Mm-hmm.
And if you're not doing that on a monthly basis, if you're not checking them, your processor is going to start increasing the rates,
Mm.
right? And it's really about learning the lingo, but also learning the rules behind it, right? Like, why would you get charged, for example, the non PCI fee, which you're supposed to answer a survey once a year? Or why is there, an extra penalty fee on one of your transactions,
Mm-hmm.
right? So I think the easiest way for them to really monitor this is look at what their overall cost is. And a lot of times people are not looking at what their overall cost is. I mean,
Mm.
we have practices that will send their merchant statement. Well, first of all, we'll ask them to send the merchant statement and they're
Yeah.
like, well, where do we find them? Because
Okay.
half the time they don't know where to find them.
Okay.
But what's really important is what is your overall cost, right? What are you paying overall? Forget about all the details. What is that figure? And that's something to monitor as well, is to make sure that that is consistent. Now, obviously, you want to get it as low as possible.
Mm-hmm.
And you could always call a processor and ask for lower fees. But again, if you don't understand the lingo, they're going to lower one fee. And then the next month, they're going to raise the fee back up somewhere else to make up for that.
Okay. Okay. So, what
Right.
are some best?
You know,
Oh, I'll let you keep going. Sorry.
yeah. One of the things I was going to say is people are going to hear this and say, well, what do you mean? I signed the contract. How could they raise fees? Well, the Visa MasterCard guidelines says that a processor could change rates whenever they want to change the rates, as long as they give you 30 days notice on the statement that most people don't look at and don't understand. So
Okay.
just because you signed up for a fee doesn't mean that that's what you're going to get long term. Those fees can change as long as that processor gives you 30 days notice.
Okay. So this is,
Yeah.
kind of a pay attention to those statements every month and read the fine print, because I'm guessing
Right.
this is in the fine print. What are some best
Yes.
practices as you're setting up? Like, say you're a new practice and you're getting set up. What are some best practices to kind of help yourself at that point and maybe avoid some of these extra costs?
Yeah, I mean it's really hard because when you're setting up a practice, I was saying before, most practices are integrated into some sort of patient management system or
Okay.
patient billing system,
Mm-hmm.
and they don't really have a choice of what credit card company to use.
Okay.
So I think, especially if you have reoccurring billing, I think the most important thing is find out who is using that company.
Mm-hmm.
Maybe find a peer that's using the company that has some low rates.
Mm-hmm.
Again, they could always call us if they choose to, but
Yeah.
if they want to go about it and find out, you know, before they buy a system, right? So it
Mm-hmm.
starts with the system they're going to use. So if it's a new
Okay.
practice, you want to try to find a EMR, right,
Mm-hmm.
that
Mm-hmm.
allows you to use more than one processor. And there's not many of them.
Okay.
But if you can't find that, you always you want to talk to someone that's used the EMR, right? Because most of the EMRs out there will integrate the credit card processing.
Mm-hmm.
And once you're integrated and have recurring billing, you're not unraveling it. You're stuck.
Okay.
So you really want to talk to some peers as well. What's the best system? Is the credit card processor easy to deal with? And
Mm-hmm.
most of them are going to say no, because a lot of them are very, very hard to deal with.
Okay.
And also, again, make sure that they have someone on staff that could monitor these accounts, or using a company to, again, monitors the accounts. It's
Yeah.
really, really important, because if you think about it, if you're paying 2% too much, I'm
Mm-hmm.
not saying 2% all in, I'm saying if you're paying 2% too much, that's on your gross sales.
Mm.
That could be 5, 6, 10% of your net profit that's
Ah,
being
okay.
taken out,
Okay.
right? So a lot of times we hear, I'm only paying an extra 0.5%, but that's on your gross sales. What's that mean out of your bottom line?
Yeah. Okay. Well, kind of extending from that is one of the things you write about in the article series we're going to be putting on the website is about having good payment processing hygiene when it comes to your practice valuation, especially when it comes time to sell or have some kind of transition. Can you talk a little bit more about that?
Yeah, so we're obviously seeing in the medical world, there's a lot of roll ups. There are a lot of sales happening. A lot of private equity has come into the market. And, we hear it in any medical, but we're seeing it in dental as well. If you're overpaying, if you have a practice that, let's say, is, doing a couple $1 million a year, right? Or $1 million a year,
Yeah.
and you're going to sell your company or sell your practice, you're going to get valued based off of EBITDA. You're going to get valued off of earnings. And maybe you'll get a 5 or a 7 or a 10. I'm not really sure what the multiples are in your
Yeah.
industry here. But if you lower the cost of your credit card processing, it's going to increase your overall valuation when you go to sell. So if you're in a spot today where you're saying, you know what, I may exit in 6 months, or I may exit in 2 years, or maybe I'm getting towards the end of wanting to practice, right? There's a
Mm-hmm.
subset of practice and doctors and dentists that know that that's coming.
Yeah.
They should clean up their merchant account as soon as possible,
Mm.
right? Because if they save, for example, if they save, I don't know, $30,000 a year, that could mean a couple $100,000 in increased valuation when they go to sell their practice.
Right.
Right now, the PE firms and the people buying them understand this, right?
Okay.
They
Mm-hmm.
understand that if they look at something, some of them are smart enough to know, oh, we could reduce the credit card service, right? And the reason I know this is we work with a couple of these firms
Okay.
that look at this and have
Yeah.
us do due diligence before
Mm-hmm.
buying something, right?
Mm-hmm.
And seeing if there's value there. But
Okay.
if you own the practice, you want to look at all of your contracts, but this is one that I would say 90+% of your revenue is probably credit cards in today's world.
Yeah.
This is one of those easy fixes that is not, let's say, 500 a month. It's let's increase your value by 2, 3, $400,000 when you're going to exit. So I think
Wow.
that anyone that is in that mind frame, whether it's 6 months or a couple years or something coming up, this is an area to really look at. Absolutely.
Okay. Well, before we wrap up, is there any last words you have for our audience in terms of what they should be thinking about in terms of saving themselves these costs?
Yeah, I think one of the best pieces of advice is, you all need to accept credit cards. There's no question about that. The credit card salesperson that's selling is not your friend.
Mm.
Okay. The way the credit card industry works is the salesperson in the company earns a percentage of every transaction. The more they charge you, the more money they're going to make every month.
Mm-hmm.
Okay. So you really have to scrutinize those relationships, especially you were talking about new practices. Very, very, very important. You also want to make sure that you're not getting these penalties, or you're not getting, a semi-annual fee, or, we've even seen things in this industry where there's a line item for some service that is, let's say, a reputation management service that the credit card processors resell, and they bill you for it, but you don't even know about it. You don't even know how
Okay.
it works.
Okay.
So it's really, really important for every line item to be scrutinized on this thing. Um, and you said use good hygiene. I mean, that's kind of a perfect way of saying it.
Yeah.
This is one of those areas that it's very easy for people to take more money than they should.
Okay. Well,
Right.
Eric,
And
thank you.
and again,
Yeah.
that's why we exist. I think, yeah, Merchant Advocate was created for transparency and
Yeah.
really helping the business owner
Hmm.
and not get taken advantage of by these large processors. That's why the company exists today.
Yeah. Well, and it just seems like, a lot of orthodontic practices that are, the private ones, they're small businesses. And so, like you said, they're the small fish in with working with a very big pond. So, with the credit card processing fee companies.
Mm-hmm.
So, yeah, absolutely. Well, Eric,
Yep,
thank you
very
so
true.
much. Thank you so much for speaking with me today. And you can find Eric's 4-part series that he wrote for us on our website. And if you want to learn more about Merchant Advocate, is it merchantadvocate.com is the website?
Yes.
Okay,
No
great.
S's, just merchantadvocate.com.
Great.
Absolutely.
All right. Well, thank you, Eric. I appreciate it.
Yeah, thank you for having us, Allison.
Great. As always, thank you for joining us. Be sure to subscribe to the Orthodontic Products Podcast to keep up with the latest episodes. And be sure to check out orthodonticproductsonline.com to keep up with the latest industry news. Until next time, take care.